one of the things that we're doing, we still have this Apple trade. Execution 1 is gone. We are waiting for round 2, and we're 6 minutes to the opening bell. So as we go through the 52-week gap, again, high, we've had them right up here. We're going to see what happens once we do get to that 648 level that we always talk about. At that price level, we're not there. We're $8 away from it. There's going to be a time where you're going to want to trade the other side of your position. So what we'll do with it is we'll use the 640 premium for an intraday profit against this long position. Here is the 635 call that will gap open, and here we are right now. We're getting ready. They're setting that print. All that data from yesterday and the option is gone. So 775 put, we're watching on that price line. Yeah, we are. Not to mention a slew of other things. Right now, you got that final opening print. There it is. That 640 is that original 4 highs and 8 lows on the print. Whoa, look at that 640 put, Mr. Goalie, coming on down to that wholesale bid. Look at that close was $10.50. So that's that opening range there. Let's walk around. That 635 call in that Apple trade, it hit 11 and a quarter. You'd be selling those calls up here right now at that high in that opening gap. Yeah, you'd start selling them now. They got a 1060 low, a 1075. It's a $1.54 premium, 22. Look at that. So one of the things you want to be doing over here is watching that opening 3-minute print. 7 highs, 8 lows. There it is, 640.09. Opening bell, 1-minute print for everyone that's trying to catch those wholesale bids on these weekly. We have masters at that wholesale bid. Here it is, volume 54. They're moving in at that $8 low. Remember one thing, 1055 was on that close. That's a 2.55 negative ratio down, bouncing 20. There it is. It's going to come down. What we're going to do is see how many highs we let that breakout side go. Go ahead and take this, like I said. Everyone bought up there. They're buying at the highs. Now, MMTs, this is how you make a market. You let that first round come barreling in at 8.15, 8.20s and $8, and they're still falling. Look at that bid fall. Now, MMT, we got 49 highs, 51 on that. It's that first minute print. This is a live breakout. It's in live market hours, 65 highs, 68 highs, 72 highs. It's running. We're finally getting down there. The public was buying big. 222 of those came off that side. There it is. That's at a resistance level. There it is. Rick Goley put a bid out there at 6.7. That lower bid, and watch that market cross itself. That's that ring-a-ding-ding, 7.55. Look at that high list is making higher highs, though. Look at that breakout run, and it's all happening in that 2-minute print. And we're going to square that wholesale bid. Once it's hit that wall of resistance and price action, we'll be getting that wholesale bid over here. Once it hits that price, look at that highs, 97. Let's keep going. The lower they take it down to you, Rick Goley. That 6.7, you will go ahead and go in there with 5 at 6.7. 6.7. Now, you have to use your judgment, too, because this is live. So I'm going to go ahead and open it up. 25 by 30, here it is. 25 by 40, that's that low hit. 411 contracts, 420, look at that, 460. They're barreling in right there. They put that low. There's 148 highs on the clock on the first 3-minute opening bell. And there was that low entry wholesale bid. There's that low entry wholesale bid on that first pass. Look at them coming in. 500 puts. Look at that. As now you got that dollar reversal. So you got 148 highs in that 3-minute print bar on that opening bell. And we got down here to that 640 put, which is wholesale bid, down here on our call side. Well, that's running beautiful. 800 of them traded. Time to sell it. 13.24. They pull back $1. It all happened live in 4 minutes. And it's how do I sell my calls at the highs, and how do I buy this put at the lows when the equity hits resistance. Here we are battling for that, and we got, look at here, there, that 635 call, a ring, the cash register coming back up to the highs. We got down to that 683. We're in a 6-minute price print. Yes, we are. Here we go. We're down here to that 670, 685 on that put side, that call side. We already rang that register. Now we're going to look to see when the amount of intraday highs are completed where we can get wholesale over here. Here it is, marked down $4.1346. It's a 645 weekly 413 at the hip. And it's how I make that bid. It's 955, 1645. Low is 920 on that print. Rick Goliath. Now, if you can read that data, speaker 1, 8.4. Speaker 1, 8.4 on 100. Speaker 1. Rick Goley, on the other hand, please go 8.4 on 5 of the 645 as it runs, and we're going to see how many more highs we can break to get that price level even down further, where all the people that have been buying the puts, look at how much they bought over here on that 640, and this is all live, and it's all 10 minutes of the opening bell, and how to square a position at resistance and how to buy a position at the bull support level, and then making that market between the public and that 10-minute opening bell. And wholesale over here, we marked it down. That means that we made 170 highs in less than 10 minutes. We're going to concede how many more highs that we make, but we got down to the lower level of this market, and we got bids out here at 8.40. And the time, 6:41 a.m. Pacific Standard Time, 4/10/2012. Once again, it's about the art of removing that risk. And when things hit resistances, there are reversals, and the dollar risk is minimal here, and you take your weekly expiration premium and you cash it in. Once these markets are made in the first 15 minutes, 30 minutes, 45 minutes, and 60-minute opening bell.